The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the May 5th, marvelous Monday, Cinco de Mayo edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating your financial freedom. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and I, we must master each and every day. So let's begin our day with empowering beliefs, words of wisdom brought to us by our extraordinary producer, Al, who makes everything that at least I do here seem so seamless. And I can assure you, folks, it is not. Now starts his day with the following incantation. I think you should as well. He starts off by saying, hey, watch your thoughts, for they become words. Watch your words, for they become actions. And watch your actions, for they'll become your habits. And watch your habits, for they become your character. But most importantly, watch your character, for it becomes your destiny out there. It is Marvelous Monday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Let's get things started out here. Of course, we already got things started. The markets are on fire. To the downside here right now, you got the Dow trading up 92 points, trading out at 16,420. S&P off 7 points, trading out 1873. NASDAQ down 14 points, trading out at 4109. Russell 2000 off 8.5 points, trading out at 1120. NDX 100 off 8 points. New York Stock Exchange down 55 points. Not a good scene because it's actually leading the, well, it's not leading the charge. You got the Russell 2000 leading the charge off 0.7% out here. On an intraday basis, we've seen a rejection of the lows this morning, or I should say that the lows this morning have put in some significant reversal candle signals out there that makes those lows muy importante. But, of course, the most important thing that you can do here if you are celebrating Cinco de Mayo, and I know many of you are out there doing that, make sure you've got a designated driver or stored inside your phone the number of a taxi service that many of you may never have used inside your local area, or just simply walk home, but do not be drinking and driving out there. All it takes is just one action to start a chain of bad accidents, and a bad just an accident out there, and that can lead to a lot of negative stuff. I spent the weekend. My middle daughter graduated from Florida State University out there, and she was on the extended program, but that extended program has now ended, thankfully, and got her degree. So she is all set out there. Of course, on the drive up and the drive back, a lot of rain that we experienced down here in Florida over the weekend. Yesterday, a whole different story. Everything kind of cleared out. Actually, up in Tallahassee on Saturday, it turned out to be a beautiful day, but a number of accidents. And several deaths, I know, in the towards the Ocala area, which is north of Tampa. Police officer and I believe a tow technician lost their lives being hit by, which is crazy. That's just the most insane thing out there. So, hey, look, if you do see some of our folks at work out there and you see some flashers, get the heck out of that lane. Just simply get out of the lane that you're in. Give them some space out there. In any event, I know you didn't listen in to talk about that, but please, it is Cinco de Mayo. It is going to be a funny and festive evening for many out there. And so as you're doing your shots of tequila, make sure that you've got a designated driver out there. Of course, Al in the den says just avoid alcohol altogether. I don't have a problem with that. It's just that most that are celebrating Cinco de Mayo are not going to be avoiding alcohol as we speak this evening. In any event, let's go check out these markets here. Let's start off with the indexes. Let's go see what's going on here. We're going to switch over to the Rhodes Momentum Indicator charts. Let's go see what we've got forming on a daily basis out here. Give me a moment to pull that up on my screen. It should be real handy here. I had it just a moment ago. Here's the NASDAQ Composite. So we got the NASDAQ Composite out right now, trading out at 41.10. It gapped down just slightly here this morning. It's trying to get back above. Let me get my crosshair. It's going to make it so much easier for me. There we go. I thought I got it. Let me do this here. There we go. Okay. So if we take a look at Friday's session out here, the actual low. Oh, come on. Don't do that to me. The actual low on Friday's session out here was down at 41.1589. We're trading at 41.10 right now. I suspect we're going to see price not just get above that. I believe there was a significant low that was put in on April 15th, and this market could easily be forming the A to B equals CD to the upside. That's right, inside of the NASDAQ composite. So today's action is going to be very important. Now, we'll take a look at a couple different time frame charts out here. In fact, let me just put the NQ up. I'll put the 120-minute chart because as we were going off the air there, it was forming we were taking a look at a couple of reversal signals. Let me actually switch over to the 120-minute chart out here. So give me just a moment to do that. We'll put up that time frame. Inside the N2, it did give us NQ, I should say. It did give us a nice morning star reversal pattern out here, and that is a 3-candle formation. Looked like it maybe was going to form a hammer. That would have been a single candle reversal. Instead, what it's doing, it's forming a morning star pattern out here. That says the low here, which came in at 35.48, would be very important. But I don't suspect that's what we are going to see out here. These markets, believe it or not, they want to move higher out there. And I know people are saying, how can that be? Well, it can be for a number of different reasons out here. That is my interpretation of what the chart patterns are telling us. And today's session will be extremely important because today could be one of those buy the rally moves that we see out here because we have the market trade down quite lower. In fact, in the NASDAQ futures, if we take a look at just the moves that we've seen here this morning, we've been down as low as, 35.48. We're at 35.76. We're already, 27 points off of those lows. Well, we'll see what the market has in store for us. There's one thing that I cannot control, that's for sure. It's what the market is going to do next out here. But on the 120-minute time frame, we saw significant reversal signals. Whether they'll hold or not, I can't tell you. That's inside the S&P, inside the NASDAQ, inside the Dow, and I would assume inside the Russell as well. So on the daily charts now, the NASDAQ, no question, it is still in a downtrend out here. In fact, this is what you want to be paying attention to. If we take a look at, I'm going to take a look at the futures contract. Just simply, it's so much easier to look at what we take when we take a look at trading inside a swing point, something that you always want to be paying attention to. The most recent swing point inside the NASDAQ gets us back to the April 24th level. Now, the low there, it's a big, wide swing point. It goes from 35.44 up to 36.18 out there. So you've got, about a 70-point move or so. But you can see price is still trading inside there. Now, on Thursday, price was moving in there and moving into the top of this descending price channel with what? With accelerating volume out here. Friday's session, we saw really a sideways to slightly lower move. It was on what? It was on lighter volume. So the pullback, in essence, on the daily chart now ran into resistance, the resistance of that descending price channel. That is really going to be the key. I did say that we could be having an A to B equals CD to the upside that is forming out here. Well, we're going to find that how we will know, or how we will increase our odds of knowing, probably better stated out here, is really going to be from a couple of different things. Number one is going to be the break of this descending price channel. If price can break through that, that would be bullish out here. We can see how that line, that's the top red diagonal line from upper left to lower right, how that is really held as a significant resistance area. And we know that this is what? This has been the weak link as well inside of the market. And so from the weak link, we want to see what it is going to do. So if we see a close today, I don't know, above 3,600, you're at 35.77, so another 25 points. You see it above 3,600. That should, looks like to me, that's where it would absolutely clear the descending price channel out there. And then the real key to the A to B equals CD is what happens when the top of that swing point gets tested or rejected or moves higher, and that level's at 36.1825. If you see a move above that, that sets up the A to B equals CD to the upside inside of the NASDAQ out there, and that would take you to a price point of 36.94. And I do suspect that is what is going to happen and unfold inside of the markets. Yep. And if we take a look at what is going on inside, let's go back and take a look at the other indexes now. So I've torn apart, in essence, the composite as well as the respective futures contract out here. Let's go take a look at, let's pull apart something else. Let's pull apart the S&P 500, right? Let's go see what the S&P 500 has done here. On a daily basis right now, it's trading out at 1875 out here. We saw a little confusion candle. That's called the high wave candle. That took place on Thursday on May 1st. We saw a little bit of a sell-off on Friday, but nothing that was significant inside the S&P 500. This stock chart here is still bullish, and this also could be forming an A to B equals CD to the upside. If I take a look at the weekly chart for you inside the S&P 500, we go see how the weekly chart ended here. Yes, look, it's up against a potential, I do say potential, price relative strength divergent pattern. That's the old shooting star that had formed out here the week ended April the 4th. That says really that is your resistance level, the top of that session, which is 1897.28. If you look at, the Bears had the opportunity to do something with the market at that shooting star pattern. They did the following trading session, April the 11th. It should not have ended there in the push down inside the markets. It should not have ended there, but it did. And the bulls, they rushed in. They formed that little bull sash candle out here. That's why, and we had a nice hammer down here at the trading session. This is a weekly chart, February 7th. That says that's really your critical low out here to be paying attention to. In fact, that's your critical low right now from a intermediate term, long-term standing contract out here. You get below, if the S&P gets below 1737.92, it will be look out below out there. I don't suspect that's what we are going to see here just yet. Yes, it is sell in May, but it didn't say May 5th or May 2nd or even May 30th for that matter. And in fact, in the stock charts here, I don't care what the expression is, the stock charts are saying, yeah, go ahead, sell into me. Go ahead, sell into me. That's exactly what they're saying. At least that's what the S&P 500 is saying. So you need to wait for at least a test of that high from the week of April the 4th out there. Let's go take a look at the daily charts for the what do you want to look at next? That was the S&P. Let's go take a look at the daily chart here for the Dow. Let's pull that up. In fact, let's pull up the Dow Jones Industrials. I was going to pull up the transportations, but we'll pull up the Dow Jones out here. Now the Dow's got resistance. We know where the cool thing is, in this battle here of bulls and bears, it's like the game of Stratego or something. We know where they are camped out. That's the cool thing. They being the sellers, they being the bears out here. You got resistance, and that's really what price did, was it got into the resistance here. The candle session is high from April the 4th. That price level here of 16,631.63. Folks, you're trading at, 16,454. So, that's a good, 180 points or so to the upside. You get a close above 16,631.63, and you're short. You really are trying to pick a top out there. You're trying to pick a fight with the bulls. Instead, what you could be looking at is an A to B equals CD to the upside out here, even inside the Dow. So the struggles that we've seen here over the past couple of days is because we should have expected that. You should expect that. That's where the bears have been camping out. They cannot hide out there. They show themselves in candle signals. That's what we have going on inside of the Dow. When we get back, we'll go take a look at the weekly chart. We'll go take a look at the New York Stock Exchange. Right now, you got net declining issues of 869. I suspect we'll see that turn positive here at the end of the trading session. 877-927-6648. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at
727-445-1044. Welcome back, folks. Composite just about to go green here. You mean green machine. So these markets, they want to move higher out there. The Dow is off 52 right now. There we go. Composite just turning green out here. The S&P down 3 points. Russell 2000 off 4.5. Leading the charge here to the upside, you've got BE Aerospace. They are up with some nice volume out there. Now, it's a real key stock for us to be paying attention to because they're at all-time highs. I do mean they're at a party. Up a nice 11%. If I am wrong about the market, and Lord knows it wouldn't be the first time. I mean, I'm wrong on my trading. I have to go back and take a look. Well, let's see what my actual accuracy rate is out here. I keep track of them. You know, part of being a CPA, cut, paste, and assembler out there, is that I do keep track of everything, meticulous about the trades, how we place them inside the newsletter service, how I place them for myself out here. Really meticulous about making sure that no matter what, because you learn things the hard way out here. At least I found you learn things, unfortunately, learn things the hard way. And I didn't always use stops. There were times where I thought I knew where the market was going to go. And in those instances, I was like a deer in the headlight when the market didn't go the way I thought that it would. It was always like, I don't know, did you ever have that feeling, you know, you're deep into a trade, you're in a losing position, you're like, well, maybe tomorrow it's going to turn. Maybe the next day it's going to turn or what have you. Terrible way to manage your money because it's not part of the strategy. That might be some kind of tactic. That is the cross your fingers system out there. And I found that the cross your fingers, hope hope to die kind of thing. You end up with the hope to die, unfortunately, out there. So don't use that. Make sure you have every trade bracketed. See, if you don't use stops, and you certainly don't ever take money off the table, how can you ever measure how well you do? You know, it's not the accounting system. The reason why I became a CPA, I suppose, well, it was suggested heavily by my father out there. Back in those days, we respected our elders, and it was actually a smart move on his part, because now I use it all the time. And so a good accounting system is not how much money's in your right-hand pocket versus your expenses in your left-hand pocket. So, look, the point is you want to make sure that you know exactly, you want to know what your trading system expectancy is. That needs to be an absolute must. If you don't know what that is, go sign up for Mastering Probability. It includes a 90-minute workshop just for signing up for that, for a couple days to watch that. We'll make it worth your while, and we'll save you a fortune. We'll help to make you a fortune more. So I'm not really interested in saving you a fortune. I'm interested in making you a fortune out here. And so I've been wrong 32.9% of the time on my calls since August of 2013 out there. Of course, what that means is that since that time period, my clients have been averaging 24% returns out there. You know, so cost $3 to $5 cost for a newsletter service that's making it, depending on $95 or so if you've got $100,000 in your trading account. Seems like a pretty good investment to me. In any event, here, let's go back, take a look at these markets. Let's go see what they're doing. I do suspect that the old sell in May is not going to take place here anytime soon, at least not in the month of May. But we'll see what the markets have in store for us. Let's go take a look at the New York Stock Exchange. That is important for us to be paying attention to because it's the wider swath of the marketplace, and I tend to get my signals from the New York Stock Exchange. I always want to know what's going on inside that. I feature that inside the newsletter each and every day. What the New York Stock Exchange did here on Friday was it tested the swing point high from April 4th. That high was out at 10,669.43. It tested it, got up to a 10,676.42 out here. We see a little bit of a gap this morning. I suspect that'll be closed by the end of the trading session, if not today, tomorrow out here. Inside the marketplace. There's no reversal signal here yet inside of the New York Stock Exchange. Now, you do have some pressure here this morning. Net decline in issues down about 778. Let me switch over to my other spreadsheet out here and see what we've got. Let me see where we're at. It would need actually 610 net decline in issues at the end of the day in order for the bears to take control of the market. So that would be something that you would want to be paying attention to at the end of the trading session. I don't suspect that is what we are going to see that is going to take place. Let's go check in on the VIX index out here. VIX index right now got up and tested. Looks like it got very close to testing the 50-day exponential moving average. That number is 1428. So what would help me to change my mind from bullish to bearish? Well, it would be the VIX closing above 1428. I don't mean 1429. It would be closing above 1428 out there. That's the 50-day exponential moving average. It would be more than 610 net decline in issues inside the New York Stock Exchange. Then I'd have to assess a few other things out here, such as the Euro-Japanese yen. But what we know about that currency pair is that it rejected lows this morning out here. It rejected its little rising trend line out here. Of course, unfortunately, it doesn't have far to go before it runs into a descending trend line. That's the way it goes, though. Right now, we got the Dow is off about 61 points, S&P down 4.5. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Leading the charge to the downside here this morning, T-Rex, Trex Company, TREX is the ticker symbol, off 7%, down $5.80. Broadsoft down 21% with volume. That is nobody. That stock chart just looks absolutely horrible out there. Realogy, RLGY off $5. Wynn Resorts, Tyson Foods. Wynn Resorts is down $4.44. Tyson down $3. Let's go check out couple of these stock charts out here. Let's take a look at Tyson Foods. Well, that's interesting. I was just looking at KBH Homes on a daily chart out here. In any event, let's go take a look at Tyson Foods. TSN is the ticker symbol. Looks like this is now taking out a B point. Let's go check out the volumes behind the move out here. Let me go ahead. So the B point out here, this was on a trading session of April the 8th. Did volume of 4.1 million shares down there. You gapped down through it this morning with 2.8 million shares already. So it looks like Tyson Foods. Now, if we just take a look at a blank chart out here, that's what I'm looking at right now. You can see that one area that strikes you as a now this had volume off of the highs. This had so here's a so when you take a look at any stock chart, if you're saying, hey, where's the first place that you would want to start? Well, first, I think there's an arsenal of books that are worthwhile for you to purchase and invest, and I think you should read them and then read them and reread them. That's really the way that it's done out there. In the first place that you want to take a look at certainly is volumes. What are the buyers and sellers telling us? Now, remember, and here's the key, Volume only represents one portion of a stock chart, one element of a stock chart. At least my belief is that only represents one element of the stock chart. Maybe it has a weighting of 25, 30%, depends on each stock chart. They're all a little bit different in a momentum chart. Volume is not going to, and how do you know if there's momentum going on? That's where the Rhodes Momentum Indicator signals really come into play. They help you to understand what's going on, what's really going on with momentum out there. In play. But right now, the first place you start is with volume. Now, in this case here, when we take a look at Tyson Foods, is there actually when we now take a look at this stock chart, it's always so easy to look at the left-hand side of the chart. You know, you can become an absolute expert on that, reading the left-hand side of the chart. The key is, how do you start to read the right-hand side of the chart? When is it that things may turn, you know, and what correlation should you use or shouldn't you use? Well, first, though, if you take a look at the April 2nd day and you see volume off the highs, is there any surprise that we're not seeing now a second sign of weakness out here? In the case of Tyson Foods, I don't know if this was at all-time highs. Let me take this back. Let me put this, I'll just quickly put it on the monthly, then we'll come back to it. Yeah, so it's at all-time highs out here. That's nasty. Well, let's skip that. Let's just go back to the daily chart out here. So it was at all-time highs. You saw volume off the highs, institutional selling. Great run. You know, this got up to a price point of 44 and some change out here back on March 31st, April Fool's Day. You know, this at the most recent bottom that had formed out here, a significant bottom that formed, was back in August of 2012. Out at $14. So that's a heck of a nice move. That's a good three-bagger, almost a three-bagger inside of Tyson Foods. Now, where price is going to move back to at a minimum, where it's going to move back to is where it's going to move back to at least that breakout session, this most recent breakout session. It's not too far away from that area. We'll see what happens as it gets back to the January 31st high of $38.25. 12 million shares there. But now that first sign of weakness, that first volume off the highs, 8.3 million shares. Today, you've already seen 3 million shares. We've been trading for an hour. So it's got some pretty healthy volume off of the top out here. Tyson Foods, you'd want to see Tyson Food come back into the sign of strength, the breakout area, which would be a close of the gap, the January 30th high or so, 34.61. And that really may be the target of where it's headed to right now. That would make a 1 to 2.618 A to B equals CD to the downside. Volume from this point forward should really be part of our navigation tool to figure out where Tyson Food is going to head down to. But what you can see is that the institutional sellers are getting out of the way of Tyson Foods out there. TSN is the ticker symbol. Let's take a look at Wynn Resorts, WYNN. Let's go see what it is. Whoops, that's the wrong Wynn. WYN was clearly a stock chart that I had looked at. I can't remember if it was from a buy standpoint or sell or what. But anyway, here, golly. I'm having fat finger complex out here. Tried to grab something and I didn't do it. Okay, so let's take a look at Wynn Resorts. Let's get rid of the markings inside the charts out here. So let's put this on let me refresh this, make sure I've got all the data. Wynn Resorts here this morning should be showing a move down. Well, it is, but it's really not that bad. Off 3. So this is after a sign of strength. So if we take a look at Wynn Resorts, it's had a nice sign of strength on Friday, May 2nd. 3.9 million shares to the upside here. Let's see if has this thing actually broken a little trend to the downside, and it did. And it did it with pretty decent volume. So here's a little trend line. We could identify a channel line on here, but on Friday, Wynn Resorts broke that trend line. Did it with accelerating volume, 3.9 million shares. So we're seeing here this morning an inside day, a pullback on volume of so far 886,000 shares. Maybe a little bit too light. We'll see if the selling continues throughout the day, if Wynn can get down and test that gap. But it has broken a recent trend line out here to the that had been to the downside. Now, what it was doing is was coming back here and testing a swing point. This had volume on January 27, 3 million shares, and that was tested with 3.7 million shares. A bit, it held as support, but a bit high with regard to that test. So ideally inside Wynn Resorts, if this really is a breakout, you'd see it pull back, test the trend line, maybe close the gap here from May the 1st. Do that on lighter volume, less than 2.6 million shares. You would prefer, of course, your benchmark is 3.9, but preferably would come back, it would test that area, and then it would be off to the races out here. That's what's going on with Wynn Resorts. Let's take a look at, let me see, what else do I have here moving to the, moving down percentage-wise. Let's take a look at Ritchie Brothers Auctioneers. RBA is the ticker symbol. down 8% here this morning. Let's go see. Not a stock chart that we've ever looked at that I can recall. So let's go see. Probably not a lot of volume inside of this equity. But Ritchie Brothers Auctioneers here. Let's see. This thing ran into some resistance. Let's see. So this morning here, this is off 443,000 shares. Most recently made a high with 1.2 million shares, a high of $25.73. Did that on April the 1st. Pulling back here into this swing. This is what it's going to test. Perhaps the low of March 3rd, right around the $21.92 area. Million shares there. It's pulling back with too much volume and wide price spread out here. So let's see. Where could Ritchie Brothers pull back to? Probably all the way back to the breakout from the lows of October in 2013, down around $18 and change out there. That's what's going on inside of Ritchie Brothers. Let's go check out some things here that are moving to the upside other than just the market out here. Let's take a look at, here's Beaver. BEAV is the ticker symbol. Man, look at the volume in this. Now, here's a reason, I talk about, I certainly do it at least during the first hour, I talk about trading tactics. To me, trading tactics are understanding patterns that are out there. Patterns being like A to B equals CD, Fibonacci expansion and contraction, Gartley buy and sell, butterfly buy and sell. And what happens is, you can find lots of books. They teach you about what those patterns are, but trading them is a whole different thing out here. If you were somebody that liked to trade those patterns, you've really got to respect and understand candle signals out there. You certainly want to understand this case here, BEAV, if you were tracking this and you were taking a look at the 1.618 Gartley that it was forming here this morning at the $97 area, you'd say, hey, because it opened up right there, maybe because it met all of the conditions, the A to B equals CD pattern. It met the condition of an expansion of a swing point of 1.618, the expansion of a swing point, both on a daily and a weekly basis. That coming from the November 26 high, 88.43, to the low down here on February 4th out at 74.78. Somebody might say, hey, I'm going to go ahead and sell that. No. You can't sell. You can't. Look at the wide-ranging bar here. Let me delete everything that's on this chart here. Somebody might look at that and say, hey, that's a gap up. Gap's got to get filled. I would say not so fast, because what you need to do is what you want to learn to do is buy those gaps, buy those breakout sessions, because that's all that they are. I want you to take a look at BEAV. And so we're going to take a look at this. I'm going to pull this apart here just for a moment as soon as I can do it. Here's the actual candle session that has formed so far today. And now I've got to just change this to a green color out here. Give me a moment to do that. There's my green. All right, now I'm going to move this over. So I'm going to try to do two things. I'm having the fat finger complex today. So there's your gap up. You might take a look at that, and because we're visual. We're so visual, it's very difficult for us to fill in those gaps. And I want you to fill in those gaps out here, because when you take a look, if you saw that and you'd say, hey, because that was, if that was a candle and that's where your pattern we're completing. A to B equals C. I don't care what the trading tactic it is that you're using. Could be a Chapman wave. If that's the candle that you were using out here, I say go fill that in. If you saw that kind of candle out here, because in essence that's really what it is that we have. In fact, you take this stock chart back here. Do you see any other candle on a daily chart that is even close to that? And the answer is no. So how strong is that? Plus with volume behind the move out here, and that is on BEAV. So what does that mean? Well, it means a couple of different things. Number one, really strong stock chart. If this thing were fortunate enough to go ahead and pull back with light volume and you could buy the breakout session, that means somewhere down towards the bottom of the gap, that and it's coming back on light volume, that becomes a nice buy out here. Likewise, because of the strength here, let's say the markets fall off of the planet. Something happens at 11:15. Something happens tomorrow. Something happens whenever. And we get a gap out here, we get a gap down, and we have an island reversal. Well, then that changes the whole pattern out here. And these are the types of stocks that you would like to short. It's just not now. You do not want to be shorting this equity, BEAV, right now. And I want you, it's a great example, in my opinion, it's a great example for us to be able to take a look at what gaps actually, what they mean to Stevie, at least. What they mean to me, what they should mean to you, and being able to fill in those areas, because you have to recognize that we're mostly visual when it comes to learning out there, and you always want to link the known to the unknown, and that's really what I try to do by really coming back and filling in these gaps and taking a look at these candles, because really this candle that I showed you out here right now, What's the difference between, the gap up or this? I mean, this candle. What is really the difference out there? Exactly. There isn't any difference out there. There is not any, other than you have a void of price. That is really the only difference that you've got. Anyways, that was on BEAV. We're going to go take a look at, in celebration of Cinco de Mayo, I am sure that's one of the reasons that Chipotle is up today. It's up about $8 and change, up about 1.6% out there. Of course, I doubt many people are going to Chipotle to actually celebrate Cinco de Mayo, but do they sell beer there? I'm going to guess that they probably do. So maybe people are going to head there. In any event, as we take a look at Chipotle, this should run into some supply, some resistance out here at this downdraft session from April the 17th. The low out there is $5.18. All the way up to $5.52. There was volume of 3.8 million shares out there. Chipotle up this morning here with 164,000 shares. Again, it's going to come into 3.8 million shares to the downside. That should be some fairly significant resistance inside of Chipotle. Now, in Chipotle could make one of those huge island. So let's assume that the market falls off of the planet here sometime after my show, because if you listen in at the first hour, I was calling for and saying that the move down in the markets was not real. Then when I say it was not real, that the signals that I was taking a look at were just suggesting that the move lower was not going to last. And that, so far, that's what we've seen here. So far, a successful call. We've seen the S&P turn positive. The composite is now positive. The Russell 2000 is about to turn positive out here. So this is a really important trading session here, too. So if you are on the short side, man, just bring them in. Do some laundries. Do some ironing. This sell in May, the markets are not going to, they do not appear to me to want to be making a turn here just yet. So, look, if you are short, that's cool. Just make sure you've got some stops in place. Now, if the market falls off, let's say that Chipotle has a really bad Cinco de Mayo. Well, today looks pretty good, but let's call it a Cinco de Seis out there. I don't even know that was correct, and if I'm not, my apologies. But let's just say that this thing were to gap down. Anytime that we would see a open below the price level, we'll just use the price below 472.41. This would be a significant reversal, because this has got a huge potential island that is still out here. And I'm not saying that's going to happen, but it is something that we should be paying attention to, that we should be looking at inside of the markets. In the event that Chipotle up on light volume today. Let's take a look at Biogen, BIIB, stock that had been a darling and a stock that has been hammered here. Actually, it doesn't look to be too bad out here. So Biogen, hey, there's one of those. How about that? There's one of those colored-in gaps out here, one of those signs of strength. And Biogen looks like it came right back into that area. It would be nice. Wouldn't it be nice here? Well, sort of be nice. Biogen was looking really great up into this trading session here. Maybe that trading session was overcooked to the downside, but there was volume off the highs. 5.7 million shares. That was on March 21st out there. So there's some damage that has been done in Biogen. Where's a decent potential buy on this? Well, it's coming back to that wide-ranging bar, which really is the gap up, which really is that sign of strength right here, right around the November 21st level, right around 245.31 to 253.22. Right now, we got the Dow slightly red. It's off $10. S&P is flat. Composite up 4 points. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow is now just slightly red, off 3 points. S&P is completely flat, 0, 0, 0. You don't see that too often, and now it's gone. But whoosh, I saw it. NASDAQ composite up 5 points, Russell down 2, NDX is off 7. As far as what we're looking for here in the markets, I think today's session really important. What we've seen thus far, trading session is not over, so anything can happen by 4 o'clock. I most certainly recognize that, but what I have to do is communicate what it is we saw this morning, what it is that we have seen thus far, and what we've seen thus far is a buying of the dip out there. And so that is important while we're seeing a change in trend that is taking place out here. And if we take a look at the SPY, what is I suspect we're going to see happen inside the SPY? Not just go test the highs from April the 4th out there, but take out the highs and complete an A to B equals CD. That takes us up to the 192.06 level. That would be at a minimum right up there. You'd get a nice 1.272 butterfly pattern. We'll have to see, and I'll go ahead and I'll draw that pattern in so you can see what it is that I'm at least looking for, what I'm calling for. And that would be, and then we'd want to be paying attention to what's volume look like, how's that candle being formed right up there, and whether or not there's a reversal after that, because price can most certainly go up to the next level. Of course, what we need to see here is we need to see the SPYs here get above the April 4th high, so that's his first in the pole vault. That is the first order of business, 189.70 out there. Excuse me, and I suspect that is what we are going to actually see take place. Inside the Qs, same thing out here. The Qs here want to make a move up to about the $90 range out there. At $90, they form a nice little Gartley pattern, I believe. Let's go take a look at that pattern taking place right around here. Well, about a 0.786, right at the 89.87. Well, I didn't draw that very well, did I? Let me see if I can actually put that and draw an accurate pattern here for you. Let me get that key reversal session there from April the 15th, which was our first signal that we were seeing a significant bottom form inside of the Qs. So right around the 89-ish area, 89, 81, $90 or so. What we'll see inside the Qs is we would see a test of the bottom of that important trend line here, and that's a trend line coming off of the June 2013 lows. Of course, if the Qs are able to bust back inside that trend line, that's a whole different signal that is out there. So that's the week, ETF, index ETF. Well, the IWM really actually now weaker than the Qs out here. But what we've seen here inside the IWM is several tests of its swing point from April 15th on later volume. Looks like today will be another rejection of that. What I mean by that would be a close above 111.72. You're trading at 111.87 right now. I'm not saying go long the IWM, but it looks like the IWM wants to run right into the top of its descending price channel. I don't know what that price projection is. It's somewhere around the 115-ish type area out there. So, of course, it's one of the signals that we're looking at inside the market. Just one of the signals. First was the weekly charts from last week. But, of course, one of the signals we were looking at here, and I just want to peek in on it, see how this is trading. And that was the Euro-Japanese yen, which traded right down into the bottom of its trend line here. That's the red diagonal line from lower left to upper right. That level was rejected. It also is going to run into rejection here right around the area of probably about 142.36. So what's really going to be key is, how does the Euro-Japanese yen bust out of this rising wedge pattern that is formed here? It's a very bearish pattern. Typically, high percentage of times, more than 50% of the time, this pattern will resolve itself to the downside. So that's going to be another thing for us to watch, because if it doesn't resolve itself to the downside, this market will zoom much higher. Folks, thanks so much for staying tuned today. Stay tuned. Our man Basil Chapman is up next. I'll see you bright and early tomorrow morning, and have a great day. Take care now.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.